GoPro pre-announced fourth quarter results today, and they missed the consensus estimates on the revenue line, the gross margin line, and the operating margin line. This sent shares down about 28% to around $10.60 a share in after hours. In this video, we're going to plug in the new guidance from management for the fourth quarter and see if the price move in after hours makes sense. To do this, we'll be using our GoPro earnings model, which you can download. If you would like to follow along, you just click on the free models download page. And then from there, you can scroll down to our GoPro model and just click the button to download. And while you're here, if you're new to our approach, from the home page, you can click to download our document, which explains exactly how our models work. So now going back to the guidance, they gave us a few items. So they're expecting fourth quarter revenue of $435 million. And if we take a look prior to this new pre-release, management had guided to $525 million, so that was a range of $500 million to $550, and the consensus estimate for the fourth quarter was down towards the lower end of that range at $511 million. And so you can see the $435 million that they're giving us now is well off that expectation. So not a good start. Next, they give us some guidance for gross margin, and there's a little bit of complexity here, because they give it to us in two different chunks. So first they say non-GAAP gross margin excluding price protection charge of 30 to 35 million and these other items, order commitments, excess inventory, obsolete tooling, would be between 44.5% and 45.5%. If you scroll down in our model to the ratio section, you can see that prior to today's release, management had guided gross margin to about 46% plus or minus 50 basis points. So this is definitely a decline, but they also have a number of one-time items here. So the next sentence says non-GAAP gross margin for the fourth quarter is anticipated to be between 34.5 and 35.5%. So I guess we're going to have to assume that these other items that they mentioned in this prior sentence are just these one-time items. So it really comes down to how much credit the street will give management for these one-time items. I would expect they're all non-GAAP and not expected to be recurring in nature. Then I would expect that the street updates their models to be about the midpoint of that gross margin guidance at 45%. So that's what we've done here. And we've actually, for the time being, we've left our gross margin, our non-GAAP gross margin adjustments consistent with prior quarters. So we really only take an adjustment for stock-based comp and amortization of intangibles in the cost of revenue. So we know we have these other one-time items, but for the time being, we're just taking it through the general gross margin percentage calculation here. So next quarter, we can put a other category. So then after gross margin, they give us the non-GAAP operating expenses for the fourth quarter, which they estimate at 150 to 152.5 million. And if we scroll back up to the income statement, at first glance you may say, well, wait a minute, that was lower than the 160 million to 170 million range that management had given us back in October. But the problem is this is on a much lower revenue base, so this really looks horrible from a percentage standpoint, percentage of revenue standpoint. So to make an adjustment in our model, we just put the full adjustment into sales and marketing expense. Obviously, there'd be some R&D impact and some G&A impact, but for right now, we just put it all in sales and marketing. And that gets us to the midpoint of management's updated guidance from tonight. The final item that they give us is cash and equivalents and marketable securities, which they estimate at 475 million. So this is actually much lower than the cash and investment balance that we had in our model prior to the release, to today's release. And it's important because we separate the value of equity from the value of cash per share in our models. So if you scroll down to the balance sheet section, you can see that we've changed our cash and investment estimate to 475 million. And we did that by adjusting some of our operating ratios. So now that we have our estimates in for the fourth quarter, we have to decide what to do with the next couple of quarters. Just to keep a sort of status quo, all else equal view in this model, in this valuation model, we left our revenue growth rates consistent with where they stood prior to today's release. We also left the gross margin the same and the operating margin the same. But keep in mind, you can download this model if you'd like to make some adjustments in there and run some sensitivity analysis of your own, just to see what would happen if analyst estimates really come down. Because that's going to be the key here. We don't know exactly how much. I mean, after such a difficult quarter, you'd expect these revenue growth rates to come down just a bit at least, and you'd probably expect to see some impact on profitability going forward. But there's just too many question marks at this point, and we'll have to wait and see where analysts make changes to their models. But there's a few things to point out here. So first of all, we should take a look at where we stand relative to consensus EPS estimates prior to today's release. So we were at 33 cents for the fourth quarter. And given that management got us all the way down to the operating income line on a non-GAAP basis, there really is only a couple of items to get to EPS from there. Other income, which is never really that significant, so we kept that consistent. And they did give us income tax guidance for the fourth quarter back in October, so obviously that'll change just a bit given the lower earnings this time around. But assuming that that percentage stays pretty consistent with what they gave us, there's not going to be too much variability in EPS. They also gave us the diluted share count estimates back in October, so we left that the same. And using those estimates, that gets you to EPS of about 17 cents. So that's what we would expect consensus to be around after analysts update their models today. So obviously much lower than 33 cents that was expected prior to today's release. So an interesting thing happens in the first and second quarters. So since the seasonality kind of kicks in and we have this lower revenue base in the fourth quarter, the decline in revenue for the first quarter is not as great on a dollar for dollar basis. So we actually get a penny benefit for EPS for the for the first quarter of next year. So again, keep in mind, if you trim the profitability estimates, or you could even trim the revenue estimates, that's going to erode that benefit. And the same thing with the second quarter. But once we get back into the fourth quarter of next year, we really start to see an impact on EPS again. So next, let's take a look at the valuation impact of all these estimates here. So if we scroll down to the valuation section below the cash flow statement in our model, you can see that we've repointed the cash to our new cash estimate for the fourth quarter. And if we assume that shares will continue to trade around 13 times next 12-month earnings on an ex-cash basis, which is where they were trading prior to tonight's release, then that would value shares at about $11.25. So not quite as bad as the 1060 we're seeing in after hours, but not much better either. And then if you take a look at our DCF, now keep in mind we haven't updated our beta or any of the other factors that are in this DCF model. It's well ahead of that $11.25 a share at $22.25. And again, if consensus estimates for the next couple of quarters are brought down, that's going to really impact our DCF valuation. But on a 50-50 DCF market multiple valuation basis, we're at $16.75 a share. So well ahead of where things are trading in after hours, and we'll just have to take a look at what consensus estimates do tomorrow. In fact, be sure to check back for that, because we'll update this model when we get that new consensus. So that's our summary. Hope you found this helpful, and if you're interested in financial modeling, please be sure to subscribe to our channel and give us a thumbs up. Thanks for watching.